Today, for the price of Bitcoin, we are dumping, and we're dumping pretty fast. This is the 30-minute chart. We went from 22,800 to 21,000 in a very short period of time. Why is that? Well, it is because the CPI data report came out for August. The expected rate was 8.1. The rate we got was 8.3. So higher than expected inflation. So it's a miss. It's a miss on expectation, though it's not a huge miss, but the point is 8.3% is still tremendously high. If we go to the consumer price index chart right here, we can see that in June we had 9.1%, then July 8.5, August 8.3. Okay, so inflation is coming down off this high a little bit. Now, I'm seeing a lot of people on social media saying, you know, inflation's topped out, whatever. Of course, you know, just kind of pushing that narrative. I mean, I can't say with certainty that it's topped out. This is not really that big of a rejection over just a few months, a couple months there. It could have topped out, but I can't say, for any level of certainty. We haven't even made lower lows. If you're looking at the chart in that perspective, we haven't even made lower lows on the CPI chart since April of 8.3. We're at 8.3 again. So, I think that inflation is still unusually high. And that means the Fed is going to have to do unusually large interest rate hikes moving forward in order to tame inflation. So now the macro is uncertain. For a while, people were kind of thinking, okay, maybe inflation will come in at 8.1 or a little bit lower, and then the Fed can pivot. But at this point, it doesn't seem like that's going to be possible. The Fed really has to take massive action to get inflation under control. With that being said, it seems like we should at least consider the possibility of continued bearishness for crypto in the stock market. We should highly consider that that is possible. Why do I say that? Well, when you raise interest rates, demand for cash increases. Big players can instead just put their cash into the bank and earn interest, right? So that is a safer option than, gambling on the market. And now we're seeing, because of today's report, let's go to the hourly for the US dollar index, the DXY, an epic pump. Inflation numbers came in higher than expected, which means the likelihood of an interest rate hike increases, which means demand for the dollar increases as people expect to yield more rewards on their dollars. And what's interesting about this pump right now is that usually how this goes so far since the beginning of the year, we create a short-term parabola, break into a larger one, run up in that parabola, break into a larger parabola, run up again. But this time, we didn't even break below the parabola. We actually held it. We held this parabola low, which is unlike anything before, which means we're going more vertical than ever before for the US dollar index. Just a few days ago, 5 days ago, we were talking about this. Key level for the US dollar index, right there. I was talking about 107.70 we discussed. 107.70. What did we bounce off of today? 107.70, exactly. So that target was a perfect target. We were saying that that was going to be the next key level to test to see if the US dollar index was going to be bullish or bearish moving forward. Well, today, the chart kind of speaks 1,000 words. US dollar ripped off that level. Amazing bounce off 107.70 for the DXY, which is bad for crypto. So it's nice to see that that target was a valid target. It was a perfect target to have. And now it's telling us what we need to know, which is that the US dollar index is maintaining its momentum. And it's likely that the US dollar index, probably continues in an epic parabola until we have some sort of major blow off top. I think that the US dollar index is sort of poised right now to at least get some sort of final blow off in momentum and really get a full parabolic extension up. What target are we going to hit? I'm not sure. What I would want to see is essentially the US dollar index to lose steam, to lose momentum. For example, The 2014-2015 bear run for Bitcoin ended when the US dollar index began going sideways. It was still going up with higher highs, but Bitcoin was mooning because the US dollar index lost momentum. 2019 Bitcoin mooned because we lost momentum, right? And then of course at 2020 we mooned because it was dumping down. So when the US dollar index is going generally sideways or down, that's bullish for Bitcoin. When it's going up, obviously bearish. So what I want to see to confirm that Bitcoin is likely to put in a low, or that we could actually call the bottom, is a major monthly rejection for the US dollar index. Something like this. Now, the thing about it is that the US dollar index, even if it does a major monthly rejection, it's likely going to test a low and even see higher highs at a later date. But even if it's doing that, the point is, again, that it's going sideways. That's, the key. And we've talked about this before. But we have no major monthly rejection yet for the US dollar index. It's still intact. It's still looking good. And with the CPI report, it's looking like we're probably going to continue up. So Fed's going to raise rates, blah, 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 blah. All right. So, yeah, for now, basically my point is we should consider the bearish scenario once again. We were really close, guys. I actually thought it was likely. I actually thought that we were going to get a breakout of this trend line. I thought that inflation was going to be a little bit lower than it was, but it's not. And we rejected the macro trend line on linear. So it's, if Bitcoin falls below 18,400, then we have a lower low. And it kind of, I suppose we could go as low as the low, 17,600, and still have a double bottom. But the macro right now is very uncertain. A lower high along the macro downtrend, not looking too good. At this point, the range is getting kind of tight along the macro downtrend line. So, we're in this zone right here, which I would personally not, I don't really care to trade this chop. Anything in here, I'm not really interested in. What I'm really interested in is a breakout above the higher the low and seeing if we get momentum on that move. Until then, it's just looking like a lot of choppiness. S&P still in a, major lower high range. I suppose we can test the lows again. Fed's going to keep raising rates. And if the S&P does get back to its low down here, Bitcoin's probably going to be at a new low by then, because Bitcoin didn't rebound as much as the S&P in terms of the way it's postured, the structure. Percentages, yes. But anyway, I'm considering the bearish scenario again. We're just getting lower highs. Keep your eye on the US dollar index, guys. It looks like it's going to go parabolic, and as long as it is, looks like there is no stopping this downtrend. So if you guys enjoyed this video, hit the like, subscribe, and I'll keep you guys updated. Of course, things can change at any moment on any day, but for now, that's how I see things. Talk to you guys soon. If you guys want to support this channel, be sure to join the Patreon, join our VIP Discord chat, and also there is a BitGet bonus reward. You can get thousands of dollars to trade with if you use that link and follow the steps. I'll see you guys in the next video.